Welcome back, everyone, to our 20th Emerging Growth Conference. Next up, we have Stratabound Minerals Corp. It trades on the OTCQB under the symbol SBMIF and on the TSXV under the symbol SB, and is a mineral development company developing its advanced staged Fremont Gold Project in the Mother Lode Gold Belt of California. Now, attendees, please submit your questions for Stratabound Minerals Corp through this webinar module right now. Let's welcome its CEO, Kim Tyler. Welcome, Kim.
Hi, thank you very much, and thank you for having Stratabound present today. Very pleased to. And I'll just fly right into the slides if you're ready right now.
Yes.
And expand them full page here if I can. Well, I'll go with this for the moment. Everybody can see that okay? So Stratabound Minerals, what's happening here? We're a relatively new group that has taken on an old company in the last 4 or 5 years. And we've been working on gold exploration, mostly in Canada and the Yukon particularly, and more recently in New Brunswick. But recently we've decided, as our backgrounds are all miners and operators, that we've got to work on building. Why are we in this? We're in this to build a mine and get going. So we recently made a transaction. We acquired a company called California Gold Mining, which owns the Fremont Project in the Mother Lode Gold Belt of California. And most people would understand or recall the 1848 gold rush, and this is right at the heart of it. This operation started operating in 1848 and then stopped in 1944. And the forward-looking statement. So a comment here that, as usual, anything you might hear might be affected by matters that we don't control, gold price and other things, and our ability to raise funds. It's been a tough soft market we've been in the last long while, but we're still here and we have a long-term view of where we want to go. I understand from the agenda, we're probably the only junior gold exploration company in this presentation. I'm going to quickly comment if you're interested in gold, and why would you be interested in gold? I've been asked this question. What do you think the gold price is going to do? And my comment, it's not mine, but 100 years ago, an ounce of gold bought you a very good suit, so $35 an ounce. Today, gold is trading at better than $1,800 an ounce, and that'll buy you several very good suits, and that's 100 years later. So my point being that if you like to shelter your money in gold, there's that, plus the fact you want to look into the market and see who's producing it and how much physical gold is out there and what's going on with mining and how much investment's going. Has there been enough in it? And we talk about battery metals, the same thing. So 4 months ago, Stratabound Minerals was an exploration company. We didn't have any ounces, NI 43, National Instrument 43-101 ounces on the books. We talked to our shareholders, board about a year ago, and we were discussing, guys, we got to get up in that $100 million market cap peer group, and those companies typically have 1 million ounces or more on their books. They've got a relatively good cash position. They've got the team to push it forward. So that's where we went, and that's why we moved with this one. And we've been looking in California for easily 5 years or more, some of us even longer. And I looked at properties 10 years ago in California, Mother Lode Gold Belt. And I'll quickly tell you that gold mining was strong in there up to 1944 when World War II hit and the War Measures Act came in and the mines shut down and everybody went to war. And many of these operations never started up again. So that to me was incredible. I'm Canadian. I've worked in the Canadian Abitibi Gold Belt for nearly 20 years or more. And in that realm, you can imagine all the gold that's been produced in the Timmins and in the Abitibi Gold Belt since World War II is a lot. And I view the Mother Lode Gold Belt in California as very similar in terms of gold potential that you would have in the Abitibi of Canada. And that, can you imagine how many more ounces might be left given that they stopped in World War II? So this slide here I have in front of you is what we have indicated. We just updated our resource estimate. It was part of what we did in August. We made the acquisition August 16th and August 31st. We have a 43-101 estimate out. It upgraded about 500,000 ounces in the indicated category and about 452,000 ounces in the inferred. And I have to comment, the Dingman property is one that we acquired with it. It is historic, and we cannot confirm those numbers, but those numbers go back to 2010 at a different cutoff. And the qualifying statements are below. One of the things we'd like to do is update that resource estimate too. And if you add them up, there's well over 1 million ounces in total of potential that we could package together. So what is, in a nutshell, if this is the one thing, what is the strategy of this company? The future vision and growth. We're moving from an exploration company with very good exploration projects, but they take a long time and a fair amount of money to develop, to be an actual mine. So we're moving fast. We want to acquire a brownfields asset, such as Fremont, and see ourselves going into production within about 2 years. And we believe we can do that. We've taken a good hard look at this property for a good long time. One of the things that was not evaluated in that 43-101, yet it was done in the past historically, was an oxide zone. I'm going to be a bit technical. What does that mean? The other two people that are operating very successfully, the other one group anyway that's offering very successfully is Equinox Gold in California. They have two operations and they're doing heap leach. That's one of the most inexpensive, least invasive, low impact, and easy to permit type of operations you'll ever find. This is a rotten, oxidized material on surface that's easily processed on surface, and we can get with very low capital and get into production. We're looking at a very small scale to start. There's a much larger project here, but we can start very small, very cheap, and that's different than these other companies that might want to go big and go home. And I'm totally against about go big or go home, because you may not have a home. Too many big companies have put billion-dollar projects into place, kickstart it and start it off, the bootstrap it into production. And that's what we want to do. And this is our background to do this sort of thing. So while we're doing that, leveraging that starter operation, we use the free cash flow to expand and build out to full production. And we use that money to leverage that money to developing our early stage exploration projects in Canada and whatever else we might pick up. We also see a lot of other low hanging fruit sitting out there in California and other jurisdictions in the Western US, and not necessarily Nevada where everybody else is. We want to go where the next place is going to be. And we think California is well overlooked for a place to go look. So we want to grow and build the next mid-tier North American gold producer. That's a mighty big ambition, but that's something we intend to do. And we've got the capacity to do it. And we've all have the experience in companies that have done this. We've worked for big companies and small. So we have that capacity. This gives you an overview of our properties. So the existing property, the legacy property I have is the Bathurst Camp properties. It's a copper cobalt property. It's small. But it has the opportunity here to make a small production and generate cash flow as well. It doesn't have to be big. These projects can be small. So that's another bootstrap operation we could do, but it's background to what we want to do. We have the Golden Culvert. I'll talk about that. Was our and still is our second flagship operation. A very excellent early stage exploration project. I visited a number of years ago when I first saw it, and gold exposed, an outcrop sticking out of the ground, very unusual and very good. And we've been working on that. You see where Fremont's located in the United States, in central California. And in recent times, we picked up something else quite interesting, McIntyre Brook Project. I'll quickly comment. Look up Puma Exploration and see what they're doing. They pulled an interesting hole. This is where nobody's been looking for gold before. And if you like the story of newfound gold in Newfoundland, the very high-grade stuff, we're in the same kind of belt. So we'll talk more about that as we go. Quickly talking, here's the Fremont project. Here's what it looks like. We're looking to the north. There's a highway that runs right through the property. You can see a bit of it coming through here. It wraps around this side here. We have a power line right through the property. These are access roads. I'm going to point out that this red material here is what we talk about as the oxide zone. And this stuff runs, even some samples we've got runs up to 4 grams. You know, that's very high grade for a heap leach. It's a very inexpensive method, but that's the kind of material that you'd be looking at for oxide. This, again, has not been evaluated in the 43-101, and it's part of what we have to do going forward. Here's a plan. Where are we? We have 3,300 acres of private land in Mariposa County. Which is private land. It's not government land. It's not Bureau of Land Management. So that's an important asset. In Canada, we call that patented land. It's get a lot more allowance to use to do what you want to do on it. Excellent access. We've got a highway running right through the property. An electric substation. You can see the substation right here. And next to it is the office building, a core storage facility. That view is taken from the deposit looking back to the west. So we're not far, very close to where we want to work. 4 kilometers. We have water access. There's a river, but nevertheless, water is one of the key issues in California. Everybody knows the fires and the drought. The mine itself has water coming out of it, and it's a huge reservoir of water underground, we believe, where it's tapped. It goes down quite deep. So we figure that the water we have is already available to us as groundwater on site. That's very important to know. It's a brownfield project with heap leach potential, and it can expand out into a larger, conventional mining with sulfide and free milling gold as well. This section's kind of busy. This slide here is kind of busy, but it shows you a cross section, a bit of geology here. You're looking at a cross section. This would be surface up through here, and one rock unit above, another rock unit below. These red units are what was historically mined up to 1944. They mined 0.266 ounces per ton back to then. Back in that time, that's fairly high grade, nearly a quarter ounce per ton. And they mined veins. And this would have been conventional mining, and they weren't heap leaching back then. This would have been what we call gravity ounces, or stuff that were crushed and grind and put out on a table and that sort of thing. But they had a hanging wall vein on the upper part and a footwall vein on the lower part, and that's what they mined. So they got high grade. What I'm pointing out, the key point of the slide is optionality I talked about. There's 3 styles of ore mineralization, and that gives you a lot of options when prices of gold go up or down. You've got the option for very narrow vein selective high grade, and you also have the opportunity for low grade. And that's what a lot of companies are doing. High price of gold, they're going back into where mining was done in the past, when the prices were low and the technology was old-timey, and they're going at big open pits now and a variety of other methods. I like sublevel cave. It's a big open pit bulk underground style of mining, where you can get back this low-grade material that's hanging in the middle. So a lot of they've mined out some of this high grade. A lot of it's left, and some of these vertical veins are still there. But the sulfide ore is in yellow, and you're seeing that in through here. And that's why we can go to this low grade of 1.6 grams per ton. And there's, again, the resource estimate on the side here. So we got optionality, different styles of ore. We can swing back and forth. We can go big. We can shrink it down. We can do what we want over time. And that's how mines last for decades, is by having that flexibility. Not sure I have time yet, but that was the mine itself and the resource itself. This slide, that what we just looked at, that block model of the resource estimate, just this little blue bit in the center, but the property is this big. And these red zones are new targets that were found by the previous company, and the blue areas are actually drilled off zones that we feel, and you're seeing some of them here. Queen Specimen, they were drilled in 2017, 2018, around the time where California Gold, the company we acquired, got into trouble and nearly hit bankruptcy, and we were able to acquire them. But you're seeing similar grades in these other deposits. I want to point out that there's no drilling in between, and maybe this the next slide shows it even better. So I'm looking at a long section. This is the air, this is the surface, and this is below surface, and we're looking at that long length of property. Here again is the block model, and all the drill holes are shown here. The original mining that was done to 1944 is all this shaded area. You can see how deep it goes. And there's even some drifts coming out here. And all this chip sampling has been put into a computer model, and we can see that there's a lot of very good high grade that's left down there that they never even got to mine because they went to the war and never finished. So that is not in the resource estimate, and we have to prove that up by doing more diamond drilling. But you can see easily that we've got areas of no drilling. And this Chicken Gulch has only got 2 sections drilled. Queen Specimen's got more drilled, very much the same grades as this. But what's going on here and what happens down here? So our work over time will be taking this nearly 1 million ounces of inferred and indicated and seeing what's below and what do we got along strike. Lots of exploration potential. You can almost say that, you know, what do we have here? Is that possible to get it all 3? Well, I don't know, and I wouldn't. That's one of those forward-looking statements. But certainly the interest is there to go look. It's very compelling. What are our next steps and strategy here? We've got, originally we thought we'd get in, because we didn't have all the data in hand, we thought we might do some diamond drilling, and of course we want to get right on to advancing this project. We think we can get it into a small-scale production scenario. There are 2 side-by-side opportunities. But in exploration, we found there's a lot of data that's been available over the years that's not in a digital format. And I came across, just by asking a few days ago, soil sampling is one of the most powerful tools you can do to cover the whole property with. Apparently it was done. I found out 3 days ago that it was done on part of the property. So I'm excited to get that data in and prove up some of these other targets and move forward. This is the kind of groundwork, trenching this. You got to do this work before you bring a diamond drill in. Everybody wants a diamond drill. But you got it, it's very expensive, and you want to bring that in when you're very confident of targets that you're going after. So we got a lot of desktop work. We want to review the 43-101 that we've done and add the oxide cap zone in it. That's critical for us for going in an early stage production. And accelerating the development of the Fremont into a producing gold mine is where we want to be. We see there's a 2-year period of permitting that we're going to require. That's the big long lead item. We could probably be in there in a couple of months if we wanted to, if it wasn't for the fact you've got to do, and this is properly done, baseline environmental work. Typically, it's 2 years of collecting data from rivers and streams and soils and so on that so that your impact on it is brought back to the way it was when you're done with it, when the mining's done. So that'll take the time. That's just the way it is. It's going to take patience for us to get there. And again, repeating myself, we're envisioning the development of a low-cost, high-grade heap leach starter pit that can be producing within 2 years. We believe that's a time frame we can work in. And that'll expand into a bulk open pit and a bulk underground in the later years of the mine. And of course, we're continuing to explore across the property. I'll move on now to our, that's it for the, I could talk lots and lots about Fremont, and I got lost and very excited about getting on it, and I want to get going on it very quickly here, but we'll talk about our Golden Culvert project. We're looking at the Yukon right here. We're Golden Culvert project is just up to the north on this road on this section here. Where it's located and a couple of features on it. We've got the British Columbia Yukon border and the NWT border. Right on the edge of it, there's an old former mine that ran since the 1960s, a tungsten mine called the Cantung mine. So we're in northern Canada. Projects are usually kicked at for being in remote locations. Well, we kind of sort of are, but we have a road, an all-season road, goes right through the property, and we can drive right up to the drill site. We put in a 2.5-kilometer road in 2018, 2019, and did some diamond drilling. The main zone is located here, a bit of an inset here of this property, which is sitting about here. What intrigued me in 2016 when I looked at it was, first of all, we're in an underexplored part of the Yukon. The old Wayne Gretzky line I use way too much. Hockey players said, we go where the puck is, not where, go where the puck's going to be next, not where it is. And we figured the puck's going to be next, the next hot area. Below us is the Three Aces project. It's been picked up by Seabridge, which is a $1 billion market cap company. And that was a 5,401 gram per ton discovery back in 2003. So a new area. It's been through a down cycle, not a lot of interest. And we saw this property just 20 kilometers north. I was very excited, owned by prospectors. And I said, why has nobody picked this up before? It didn't have any drilling, but it had an outcrop in the center of this valley that had numerous samples by various people, nothing less than 7 grams and as high as 24 grams per ton. No duds. And gold, as people will know, it's nuggety, which means you might get a gob of gold and then nothing, and a gob of gold. And that's what nuggety means. It's tough to predict, but that was very predictable. I walked up the hill about 800 meters and saw another outcrop in 2016, all through this rubble. And it assayed 8 grams, and it was lined up with the first one. So I thought that was amazing. Nearly a kilometer here of unexplored strike length, and wherever it's poking through the ground, you're getting gold out of it. So Stratabound initially was as a shell in 2017. It was struggling. It had debt. And I was thinking this is perfect to put into a shell. And I got approached. Looking from a friend. Would you like to run this company? We're looking for a project. We popped it in. We raised $1 million in 2018. We did some drilling, and we got as high as 60 grams per ton in the first drill program. Very pleased with that. And have expanded it forward. Another very busy slide. I talked about that outcrop I walked in. That's down here on this slide. And the second outcrop that ran 8 grams was here. But we noticed over the years, float train, which is quartz boulders lining up in between on surface, lining up between these rock outcrops sticking out of the ground. So I said, let's sample those because they look interesting. We got 90-some samples as high as 320 grams per ton. That's exceptional to find lying on surface, and they all lined up with these veins. So very excited about that. That was big news for us, and we're continuing to explore in there. What you see these roads through here, what we put in 2018, 2019, and we've done some diamond drilling. A really busy slide. I invite you to look at our presentation on our website to digest that one. Lots of information. I guess that's the point. Lots of drilling, lots of trenching, lots of work to show that we've got something of value here and much potential to look forward on. We decided also in 2021 to look further, because we only looked in the main central area, this little bit here, and yet we control all this ground. So we did some more work, soil sampling. It hadn't been touched, nobody even walked over it. And soil sampling works very, very well again. Grid sampling soils in the ground. A long section through here, you're seeing where the main activity of work has been in the last while. But even then, we're picking up rocks on the ground that are running up to 4 grams either side. It needs to be checked out. This is a summary of our 2021 program, a very busy time. We knew of this main area in the center. Here's the road, the highway running through, and here's the road in the center. And we had no sampling or information up here, no information, except that in 2019, and I'll just point out behind me, if you can see it, this photograph, that's me getting out of the helicopter in 2019, checking out over the ridge here, looking for a soil sample that that was kicked about 50 ppb, and we found a new vein up there that ran about half a gram, which is 7 kilometers away with no work in between. So that was a discovery in 2019, and subsequent to that, and I'm talking very fast because I know I got to get a lot of information in a very short time. A lot of soil sampling was done through here, and we discovered a whole new soil anomaly that lines up, connects with that vein we found in 2019. The highest value of over 1,000 ppb, that's a gram per ton from soils, is in this location. There's our main area we know about, and we've got 2 areas below here that's hardly explored at all. We're going to get to that eventually, very rough ground. But now we've got 3 kilometers here, another 10 kilometers here, and even a zone up here. We got about 17 kilometers out of 28 that shows very prospective soil anomalies. We have to get in there next. I tried to get in there September to get on the ground right after we got the results, and we couldn't get in because of the weather. And now there's snow over the ground in the Yukon. You won't see very much. We've got to get in and get on those anomalies and test them on the ground, map the rocks, sample them again. Subsequent to that, we'll probably do some trenching, and eventually we'll put some drills on it to see what they do. And we'll get 2 dimensions out of it on surface, and then diamond drilling will come in and see what we got in the 3rd dimension. But we think we're in a very good area. We're in an area very not far away. Again, there's a 5,400 gram per ton discovery that Seabright owns. I'm going to talk about this, our McIntyre Brook in eastern New Brunswick, and every maritime explorer has got this map. It deserves talking about. The quick story here is that 450 million years ago, there was one giant continent. Africa, North America, Greenland, and Europe, and everything collided in one big, you've heard of continental drift. It all collided, and and where it squeezed up was this suture zone called the Epitus suture zone. Subsequently, we know about mid-Atlantic drift, and that the continents are spreading apart. So really, Great Britain and Ireland is once part of Eastern North America. These are the same rocks, same age, they're just split apart. But where along that line, where that suture happened, the rocks got squeezed, and then the minerals got fluidized, and they came up through the rocks, and they leached out gold and arsenic sometimes, and lead and zinc and other minerals, and deposited them near surface. And so now we're finding a wonderful discovery in eastern Newfoundland. Newfound gold's in there, Labrador gold's in there. Marathon's been in there for a while. And this is an area I chuckle about because my colleagues in geology will say, don't go to Newfoundland, there's no gold to be found there. And yet they're finding whopper discoveries people have been walking over for decades now. So that line is where you want to look. I got approached by a prospector in about 2016 again of a property he had. No big companies are up here. And this little hook in the top is in northern New Brunswick. Puma Exploration is the one to look at. They're right beside us. They just pulled a hole 5.5 grams over 50 meters in an area where nobody's been looking before. The market ignored it. In fact, shorted the stock about 17%. I'm just astonished that the market's doing this right now, but it's a soft market, and it comes back again. We're right beside these guys. They're doing amazing work, finding really exciting results. And I think it's worthwhile people watching this one. It's very early stage though. And a comment, it can take a lot of time and a lot of money to really find a mine in here, but there's certainly a heck of a lot of gold in an area of the world where people haven't been looking and should be expecting it, but weren't. So I'll move on from that one and quickly talk about our legacy project, the Captain Copper Cobalt. It's small, but it does have high grade in it, and it's very close to a deep water port in Bathurst, just north of Bathurst, New Brunswick. We're in an excellent belt. These are mega 100 million ton deposits. Brunswick number 6 and number 12 are on the same belt, and that's where we're located right here. This is our property. It's a small deposit, but it can have high grade in it, and I'm going to show you this next slide. Last year, we did very tight space drilling. This would be drilling for production purposes. That's the kind of work we did. We did it very, very tight to get very good close control on it. Grade control is the word we use in the mining business to make sure you're very confident of your grades when you get into mine it. And that's what we did. You did a small scale. And our plan here is, it was more front and center. It's now backed off a bit with Fremont in our California project. But still, this is one that we could put in a truck and not mill it in the location and do any processing there. But it could be custom milled, and we've been approached by that. And we can put it on a boat, ship it anywhere around the world. Or maybe it could be done in New Brunswick or somewhere else in Canada or North America, whoever is interested. But it does have high value copper in it with some cobalt and gold credits in it. So we're looking at that one as an opportunity as well. I won't talk about the Dingman. There's way too much to talk about, but quickly end off here. That really circling back to the beginning, and we urge patience with the market. patience with our company. We're trying to combine two companies. That's taken us time right now to get bank accounts sorted, all that kind of stuff that if you buy a house, you've got to, inform people about your new mailing address, all that kind of crazy stuff we're in the middle of right now. We acquired debt with California Gold, and we're working to resolve that. We're just finishing up a small financing right now. Part of that is to pay down that loan. We want a cleaner balance sheet. We want to go forward with the cleanest balance sheet as we can, with a good runway of money to develop our projects. We believe we've got that, and we've got the people, and we got the patience to get this forward. So if you're looking for a junior gold story, and the last thing I'm going to say is the one thing I have not done much of recently, because there wasn't much point to it in a soft market. You can spend a lot of money marketing and getting the word out there, but if there's nobody going to the movies, you may as well hold and wait. We think the time is now. It's been soft too long. Gold's starting to kick well over $1,800 an ounce. We see things happening with the economy returning and perhaps inflation and gold and so on. You make your own judgment on it, but we feel it's the right time to get out there. And my next 2 months are going to be marketing, because we are aware that we're fighting against a lot of competition in cyber coin, crypto coin, marijuana, cannabis stocks. All these markets didn't exist 30 years ago. The big player for people on their weekend money was in the junior mining stocks, and that pool of capital has moved on to other places. So we know we're fighting hard to get attention, but that's what we're going to be doing, is getting out there. And we really have everything we need to get moving and build a junior gold miner. The market cap to build a small heap leach isn't, the pre-production cap is not very much, a couple $1 million, you can get going. So follow us, watch us, be patient. It's going to take some time, but we're in for the long haul here. And I'm done with my talk. I have pretty much it. I can talk a bit about who owns us. We have a very tight share structure. A good 3 or 4 groups hold a big major chunk of it, of the company. And I personally hold over 1.5 million shares. I'm as angry as anybody about the share price. I'm very disappointed, but we're going to work on getting that built up. And I'm finished. If there's any questions or anybody's got something to say, I'm here to answer questions.
Well, great presentation. We have just a few minutes left before we need to move on to our next presenter. We got lots of questions, so I'm going to send them all to you, but let's see if we can answer a few quickly. Luke Baird wants to know, when do you anticipate production starting?
If we can get our financing done, we're going to get it right away, but I've said 2 years.
Okay.
And it's all around the permitting stuff. And I want to comment on that. We've got an excellent team of people that is not on our website, of California permitters and geologists that are top quality. They permitted chemical plants on the salt flats outside of San Francisco. So we got a good team down there, and they love this project. They've been on it. But we got to get on the ground running. I got to get the financing done, and I got to clean up corporate affairs, and then we can get going. Just anxious to get at it.
Kim Jennings wants to know, are you currently capitalized to get to production? If not, how much do you need to raise?
We're looking, this is a scary thing to answer, but that heap leach is small, 50, 100,000 tons. It'll cost, I'm looking at a project in all my projects that are a couple of $1 million capital to get going, and they earn $3 or $4 million. So that's what we're looking at doing. So if you look at what we've got just after this finance, I don't know where we'll land, but probably about $5 or $6 million that we'll have on the books. And that's, if you can read through that, I'm hoping I never have to raise another dollar again, because I'll tell you that part of my job I dislike the most is going to the market with my hat out looking for money. I prefer to finance our projects with our own project, our own mining than anything else.
Last question, Kim. Keith Cabrera wants to know what majors are currently operating close to you, and if any, how close are they?
Equinox. Look up Equinox and see what they're doing. I'll say one thing. California, from the mining world, used to be considered a tough jurisdiction, permitting-wise and social-wise, to do mining. We're in a very strong mining district, and that's the thing to understand. I've learned about the United States. The counties basically run interference on the regulatory thing, which means they've got skin in the game to see things happen. It doesn't mean we don't do things. We do things by the book. We want to exceed expectations and all the best things that we require. But California has been considered a tough place to work. But I'm finding out my home province of Ontario in Canada is becoming one of the toughest places to get a mining project going in the planet. And the mining's got a lot of work to do to show why we can do it responsibly, but we can and we do, and we got to get this through. But that's I'm not sure if I answered the question. I probably digressed a bit, but we find that California is a great jurisdiction to be mining and for the opportunities down there. Equinox is the example, is the answer to the question. Ross Beatty is one of the biggest names in gold mining. Follow what they're doing. We're going to follow their plan. They're doing heap leach. We can do heap leach. They're an open pit. We're open pit too.
Great. Thank you, Kim. We do have more questions for you, but we are out of time. So we'll send them directly to you so you can answer. And then hopefully you'll come back again on our conference with some more updates. Thank you for your time and presentation.
Thank you very much for having Stratabound on. Excellent.
All right. Good luck to you. Okay, everyone, stay with us as we transition to our next presenter. We'll be right back.